I am already in the halt, Toby.
Okay.
Good to see
Nice.
everyone. Are we looking at VFS?
He's on VFS.
I'm I'm only in with 94 shares from 38.50, so
Yeah, but
it's
it's at
showing a
40.
dollar lower resumption now.
Let's see here.
All alone.
But I'm not
Buy
too
the
worried
dip.
about that. As long as it holds like 40 or 40.50, I feel like there's still a pretty good chance it'll squeeze higher.
Trying to get our audience to get that anxiety push.
VFS may resume in less than a minute.
Toby, you got
I'm
your bot telling you it's telling us what's up and
Yeah,
down.
we can get.
It's only worth it if you work for it. It's only worth it if you work for it. I won't stop till they hear me now. I won't stop till I wear the crown.
I'm sitting nicely green on it at this point, so just kind of gonna hold on, see what happens on resumption.
Nice. Feel free
Kind
to
of surprised that it's showing.
Share my screen if you want, or
Surprised that it's showing such a lower resumption. Yeah, I can show mine.
you just have the better resumption. I don't have all that.
10
Yeah.
seconds.
10 seconds. There you go. Price is coming back up a little bit. So back down to 40.27. I wonder where it'll open. 39.77.
Nice
Interesting.
pop.
But
It's probably still gonna fall.
watch this. If it holds 41, so ask is 41.25. As long as it holds up here, I think we're good for like 43, 44. So there you go.
Definitely looked like it. I don't trade as much anymore, but this is very much a squeezy.
Yeah, exactly. Like this type of thing, I'm not that worried if it's opening a little bit lower after this big of a move up.
Well,
Look at that, 44.
44.
that's another reason. That's another reason, like traders who do so well is because there's actually a very high maximum favorable excursion if you're trading something with this much volume. As in, like it wouldn't drop down. It wouldn't drop down that badly. Now that I think about it from an like algorithmic sense. Yeah. What is talking about?
That
was
rid of
that
that
was a nice
thing.
squeeze. Jeez.
Toby, your bot's speaking
Look at
to this. Damn, that is ridiculous.
That's an
VFS.
ignition
Yeah,
handle.
so is this a time to buy a pullback? It might be. I'm going to 43.20. Just 100 shares.
Trade so far, Danny.
Huh?
Great trade so far.
Crap. All the way back to
Yeah,
41.
I'd like to see it get back over 43 at this point, obviously, but if it doesn't, I'll just cut it and I'll have lost $100 off the top, which is not a big deal. I think it was worth trying to take a position there. All right, it's going lower, so I lost $140 on that position, whatever. Kind of too bad because I think I didn't make any money after the halt.
I see. Yeah, good point.
Oh, did you dump it when it resumed?
No, I held it and I sold through the push higher. I got up to like 1,700 on it. And then I bought the pullback here at 43.20 just with 114 shares. Really small size. I think if it was going to have pulled back and then base out and go higher, that was a really good spot to do it. For some reason, whatever's going on in it, that's a really, really strong rejection there. So I don't know. But it's been kind of a tough, choppy day. I started out just doing my best to like be less than 200, 300 red. And at this point I'm at 1950. So
Hey, that's great on the day in this market, I think.
it's good. It's so much needed. I've just been getting beaten up so bad, like every day.
Same. My last week was 2 max losses, and I was just like,
Yeah.
ugh.
Yeah, me too.
The harder you try, like the worse it gets. It's like you're in quicksand.
Well, the kind of frustrating thing for me, and you guys who look at my Instagram post and P&L each day, you probably realize how frustrating it is nearly every day to go from like 2 or 3 grand, 1 to 3 grand red straight back to zero on like one good move at the end of the day that pops out of nowhere. And it's like, I'm glad I can do that, but I really need to work on avoiding the BS before we get those moves. And I did a better job with that today. So
It's funny you say that because Toby was telling me yesterday he had a similar thing. He was also read. Oh, Toby, you could probably explain it better than me. But then, at the end of the day, had that ticker that, that helped him.
Doing so well too, because I'm trying to not to get into trouble, kind of what Danny's talking about.
Yeah.
And I was only like net minus like $50, just kind of cruising, no big deal. And then I don't know what happened. I think I just got greedy or something, and I faced a halt, and it just kept dumping on me, and I just kept exiting the trade and then re-entering. And I was down 2,000 immediately.
That's the biggest thing that I'm doing bad lately, is just taking a position in something that like I know is not my best thing, like a mid cap. I traded S yesterday. I was red on it. And I'll take a position on it. I'll lose 50 or $100. Then all of a sudden I'm actively trading it and losing way more than that. And I just need to not touch them, which I did better on today. So it's all just learning and doing better.
I would have been fine if I just stopped, but I, lost. I guess it's more of like a revenge trade at that point, because the next trade was double the size, lost again. And then all of a sudden, I was
exactly
down, and I was only $50 down like 5 minutes before that.
Exactly. I went from down 200 on the day to down 3,000 on the day.
My God.
Actually, no, yesterday just 2,000.
But I kept trading it, and then I was able to get back to only negative 800 on it. And then at the end of the day, SOS popped up and started to really squeeze right.
That's what got me.
And I hit that for about $1 grand. So I was only like a couple hundred.
Yeah, I made 2,400 on that in the last like 30 minutes of the market. And I was like,
Hey,
can't I just like do better and not be starting down 2,000 in the first place?
Yeah, you could be popping $2 grand then.
Yeah, exactly. Well, I did that today. So
yeah,
actually I nearly didn't. I started trading NVIDIA out of the open, and I was going long with like small size, trying to catch the bounce, because I saw, obviously it gapped up today. I thought we would have a little bit of a dip, some gap fill down to the downside, and then a nice big bounce. So I was trying to size in small into that bounce, and before I knew it, I was down 1,000 on it. I took, once it came down here, I took 300 shares short and made like 900 back on that trade, or 800 or something. So I'm only red 200 on it, which is
that
fine.
was a beautiful trend following trade right there. That was
yeah, because you had the extension to the downside, kind of test of support, see if that was going to hold, kind of didn't, but then a bigger bullish candle, a bit of a bullish trend, and then a complete failure of that trend. So that was a pretty obvious short to me at that point.
Yeah.
So I hit that with decent size. Honestly, that's like a $135,000 position, which is not something that I normally do on something like NVIDIA or large caps like that. But I thought that the trade made sense. So
yeah, and NVIDIA
I scaled out and covered down into somewhere down here.
It went straight up like a rocket ship yesterday.
Yeah.
Gained $100 billion in market cap in one day.
That's crazy. I'm watching
pretty much buy anywhere and put green on it yesterday.
Pretty much, yeah. I made a couple hundred on it yesterday. It helped my day out a little bit. I'm a little confused about the sell-off here on VFS. Someone's
You're
just
confused about the sell-off. It's up 300%.
I know.
What are you talking about?
Feels like a great dip buy.
It just went from
Yeah.
3 to 48, 30 to 48, just like in what, 20 minutes?
I'm confused, okay?
Is that its
I'm
all-time
like,
high?
why isn't this going to 100?
And Nvidia would be a really good one for you to cover at one point, maybe, because it looks like the perfect thing to discuss with ADD and Void as it just breaks higher and keeps the trend. I don't know if you were looking at that. You probably were.
Me?
You mean me?
Colby, yeah.
Yeah.
I don't really trade any large caps anymore because I'm trying to just completely hone in on like like extremely simple, break it down into like two variables. If these two variables exist, I take it. If they don't, I don't.
Yeah.
And today,
For what though? Like for what market?
so well, the ES futures, well, MES futures for now until I can size back up. But
Don't those follow the market though? Like don't they follow SPY?
Nvidia does a lot, but Nvidia is selling off today just
No, I'm
because
saying the futures. Don't the futures market follow like SPY on like they have like some I'm assuming you're talking about an equities future, right? Like
just the futures market. I mean,
okay, so
the futures are the main market, and then the SPY is just a derivative of that in stock form. Yeah.
Yeah.
Right?
Okay, wait.
HKD is having a nice
but
move.
yeah, I guess what I'm saying is that they're all relatively correlated, right? So they are highly correlated. So you're essentially just trading the same thing.
Oh,
But
yeah.
okay, that's what I mean. Yeah.
There's
Yes.
SPX, MES,
When someone, yeah,
ES,
when someone tells me
SPY.
they're trading, when someone tells me they're trading like futures and then trading SPY, SPY is better. I'm like, you're trading, you guys are all trading
Yeah,
the
it's the
same
same
thing.
thing.
If you're trading large caps too, most of the time you're kind of trading the same thing, depending on like
Yeah.
correlation. Yeah.
Mostly,
Depending on
you're
which
trading
one
like the
you're trading, which
NASDAQ
one
pretty
is
much.
yeah.
If
Which
you're
one's
trading a
leading the
big
market,
tech.
which one you're trading.
Obviously for me, like that's the biggest thing I have to think about. Like what I can't have two positions in two things that move the same. It's the same thing as me having the same risk. So
Right.
so I have to like people want to think that everything is correlated to SPY. Well, not necessarily. Like if you look at Johnson and Johnson and look at XOM today, XOM is up, I think, in the first hour. And all of them are relatively different, right? They have very different, slightly different correlation, especially on the first hour. So I have to think about that. Like when a position is entered, make sure there's low correlation between the strategies that are trading them.
Do you try to target opposite sectors then, like risk on versus risk off sectors?
I don't really think about I don't really think about the sectors. I run them through a correlation scan. So
Yeah.
I don't even know what most of these symbols, I don't even know what they mean, like until I have to look it up. Because I just
Sounds like
run
my small cap scanner.
That's
Yeah.
exactly what I was thinking. I'm like, I have no idea what I'm trading. I know that it's moving, making me money most of the time.
If they are because when I create a strategy, right, the idea for the strategy is okay, make sure the strategy works on a lot of things. Okay, when the strategy works on a lot of things, now make sure you get batches of correlations that are different. Now, when you're done with that, then you do robustness testing, then you do all of this. Now, the hard part is the beginning part, which is the idea and all of that. But I have a bunch of correlation things that I can check. I can check correlation for just the first hour. So on a consistent basis, how they're different. I can check correlation of when the price, the orders open up. I can check correlation for anything if I wanted to, if I really coded it for that idea. So it's very important because just I don't ever want to double my risk. Like you would see if you saw the strategies run, you never see two strategies, or you rarely see two strategies kind of taking the same idea on the same stocks. They kind of move differently.
So like let's say you're looking at like a long strategy just based off of some variable. You're not going to go long Apple and Nvidia at the same time because they're both correlated directly to the NASDAQ.
They're not even in the same strategy. So like the strategy already has stocks that I put into them. Nvidia would not be with Apple. They would automatically be voided. One of them has to be the one to go. So I kind of pick which one makes the most sense. And it's kind of the same thing you guys do too. Like so you guys do that on a consistent basis when you trade like low floats or even just anything, because you're one individual, right? So you're trading, you're never in two trades at once for the most part, right? So if something is going down, you're not trading it. You're trading the thing that's going up. So you're choosing the thing that is like, but most of these small caps also get correlated on a day. Like how many times do you see when one ticker is going 200%, everything goes up 10, 15%. And then when they all go down, they go down. But you see that one that is still going up. Well, probably that one that is still going up has an irregularity. Maybe there's a small cap. There's a short seller that's getting squeezed out that is pretty much pushing it up. And now this is the one that goes up 300%. But you're choosing correlation too on a subconscious, well, not subconscious, implicitly. Like you're choosing to trade the thing that is not correlated to the bad things. And if everything was just going up, if like, for example, if Tommy just put 5 positions in things that were just going up and they all went down, he's taking the same trade. He could have just focused on the one that would have done better and not kind of discombobulate yourself and not know what's going on. Because I that probably happens a lot where you're in 2 trades, they all start going down at the same time, and you're like, well, I could have just focused on that one and not had to do that. I remember I used to do that a lot back in the day, and now I think about that when I do correlation. I'm like, I could have just lost the money on one. I don't want to lose it, and then you get confused and you hate your day, and it's like, yeah.
One big thing I think about is trading the best ticker. Like if there's several tickers, I just want to focus on the best one.
Exactly.
Oftentimes that's really, there's one that really works, and the other ones are all like iffy.
I think there's I think there's that, choosing the best one. For one, obviously you want to choose the one with the most relative strength, but then being able to just completely focus on it and trade it as best as you can is another edge in itself, rather than focusing on 2 or 3 things that are moving.
Amen.
Lawrence, do you have ATR and RVol in your
we use ATR only for like stop loss, like where the stop loss should be, but I don't think we have. I mean, there's so many better ways to do different things. You can really use, like, ATR can give you volatility, it can give you it can give you like expected returns over a certain period. You can use it for anything if you're really creative with it. So it's really just what you have. But back to like Danny's point, like it's not only just looking for what's the best, but what's the best for you. Because what happens is that if, like, for example, okay, so I'm telling, everything is correlated. Like Apple, why don't I just pick, if Apple, Nvidia, and all of these are correlated, why not just pick Nvidia instead of Apple, right? Well, why is Apple the best? Because there's microeconomics and maybe macroeconomic reasons why Apple would do better over a long back tested. Like, the company is better. Or the structure of the price movement is just stronger upward. And so, like, though they move down at the same time, when Apple moves down, it moves down less. So that's how you distinguish which is better versus which is worse. And for us, when you're trading discretionarily, you can just see that. But when you're doing this code, you have to like be able to measure everything to some extent, because you need to understand why you're making the decisions you're making. Because you can't just have a portfolio that isn't like thought through. But yeah, I think Toby just said something. It's muted. Oh, never mind. Okay.
Toby, you're muted. I don't know if you're.
He's good.
I said, but when it moves up less.
Yeah.
Every small cap trader's nightmare.
Well, that is the truth. So let me explain this. I'm dealing with this right now. What is move up less? Isn't move up less just means that you didn't take a bigger position? Because really, you can define how much something moves by how much you size. Because your equity is based off like what you're expecting, your expected return. Remember, like, everything we're trading are just vehicles for growth. That's why you can have someone who is trading the same thing as you make only $100 and then another person is making 20,000 and you guys can take the same trade. It's all about sizing. That's why I always say it always goes back to sizing. So when something moves up less, but is more stable, maybe go for that because it's more stable in moving up. Now you can just size and control. You can control your equity growth based off your sizing. It's a different way to think about that. So
that's the same thing if you said that Apple moves down less. So you can say the exact same thing for that too.
No, what I'm saying is that if something moves down, yeah, but the thing is that it moves down less and it's more stable. So like certain things like Tesla, for example, when it moves down, it's aggressive. When it moves up, it's aggressive. But
It's
like
also aggressive.
so you can react to it. You can react to it differently based on, trust me, because I Apple is like all of our long strategies, and we have like 4 of them. I get to see how it reacts to price. It's just a lot more stable. And I think that shows in the equity chart. If you look at the chart on Webull or most of you guys are TD Ameritrade, right? I don't think anyone. TradeStation is also really good if anyone uses that.
Yeah, I use that.
Sounds like you're kind of explaining a little bit of the term beta.
Yeah,
correlation with the overall market. Some stocks are more volatile, up and down.
Yeah, but no,
the market.
The thing about Apple is that in general, like look at a day where the market is really strongly down, like going down, and just look at how Apple reacts to it. Like it goes down so softly, like it tries to hold itself. And there's a lot of reasons you can say that, like, pension funds buying orders, and there's a lot of different macroeconomics for Apple to be number one. I mean, literally it's the first thing you search when you look up a stock. It's 2 A's. It's like the first thing on every ticker list besides like AA. So there's a lot of reasons, at least in my head, that I think that macroeconomics keeps the stock up. And it's just a stronger stock on the long side, and it really shows in general. So
there's a good study where it showed if tickers have more attractive names, like I don't know, sometimes you see a ticker that's like HOTT, like it's hot. I don't know, like something ridiculous.
I see that, yeah.
They outperform ugly ticker names.
My all-time favorite ticker is Fat BB.
That's hilarious. There's the TLSA.
Yeah, that one confuses me sometimes. I'm
really?
like,
fucking ticker.
Oh, nice.
There was one the other
TLSA
week. It was called MF.
Yeah.
That's a classic.
Yell.
Coin.
Yeah, there's some meds.
One of my other favorites is Race, which is Ferrari. I'm a proud shareholder of Ferrari. I've been holding 1 share now for a few years. Not a big deal.
I did not know that. Yeah, Race, Ferrari.
As a self-respecting Italian, I have to. It's actually up. I bought it at like 200. It's at 300 now, so I'm doing great.
It's actually a pretty consistent uptrend, Ferrari.
Have you guys seen this called I think it's LLLY or whatever. Someone told me about it, and this thing is just straight going up.
Eli Lilly.
It didn't react to 2020.
Yeah.
It's just like, well, it did, but it didn't react in that bad of a way, and it just keeps going up, right? And this is an example of like something that might be correlated with the market, but still strong, has its own strength. It's like when the market goes down, it doesn't go down that much, but when it goes up a lot. I don't know let me look it up, because I might be telling you guys the wrong thing. Yeah, it's LL.
That's
LLY.
fucked. That's a fucked chart.
Powerhouse.
Yeah.
Holy
Wait,
shit.
no, it's LLY.
Yeah.
Yeah, LLY. Sorry. Yeah, LLY. And it's like
my girlfriend's dad worked for Eli Lilly. He just retired this year off of this move.
Really?
He's retired off.
Yeah. He was accumulating stock options.
Yeah. Nice. I have a friend who works there.
Them all
I think
out.
he works there.
I don't even know what they do, but I was like, wow, this is crazy.
It's pharmaceutical.
Pharma.
Okay.
No surprise there.
I think the reason why they don't it doesn't show up for me is because I have like the most liquid stocks and the data in our database. Like I just look at the most liquid, and I think it's just not liquid enough to trade intraday. But this is a good example of opportunity that you can get from like if you hold. Like if
it barely trades intraday, although it's pretty expensive too. So
yeah, now it's so expensive. I mean, I just wouldn't touch it.
So this is our first time having 6 people on the podcast. It's kind of crazy and monumental here. I don't know how I'm going to make a thumbnail. I'm already capitulating in my head.
Yeah, have fun with that. Finding 6 pictures that look good.
Oh god, it was already miserable last time with 5 people.
Uh-huh.
SOXS.
Oh, there goes Toby again. Is that Toby? Is that you? That I think that was.
No, it's Toby.
Not me.
Hey, me. So what are you guys doing with this summer trading here in August? Because I'll tell you what, last week I was so disappointed with the action.
God.
Every day I have like this little expected value where I type in like what my expected value is today based on what I'm seeing, what the market trends are, how I feel. And it was like every day I've noticed I was putting like negative, and I rarely put negative. And I was like, if every day I'm walking to the market with a negative expected value, why am I trading? So I was like, I think I'm going to take the last week of August basically off, which is this week. So I was checking the markets pre-market to see if there was a positive expected value, like let's say 100% gapper in the morning. And then I would trade it as long as I could and get out before I give back my money, which I've been doing a lot lately. So that's kind of been my attitude. Hopefully we get more momentum. What are you guys thinking here? How are you approaching this?
I
Yeah, I'm
think
having a hard time.
well, yeah, definitely a hard time, but I think this is a good example of the positive of being a discretionary trader is that you can read the expected value, and you're not taking the same level of share size every single day. An algo. The downside is if it's automatic, like on a day like last week, days like last week, you're taking your X amount of shares and your drawdown. Well, obviously it's going to be bigger than, if a discretionary trader was able to read that and adjust their size accordingly. So I do agree with like what we were saying last podcast about, if you have a strategy that's making money, just consistently punch that buy button for the shares that you've been doing, maybe even increasing it over time. Because of the profitable strategy. However, the drawdown, you could potentially limit that if you're able to factor in that extra variable that discretionary traders have, which is reading that market sentiment, to be able to maybe minimize that a little more. So you're kind of more at the higher end of your P&L curve.
I completely agree with that. The idea of like of even algos, like even for me, don't get me wrong, all my algos, they don't trade it. They don't need, like today is a weekday. I think one of our long strategies is in, and we're up for the day. But yeah, reading when things can get really bad, sometimes it's not a feature. But I will say though, I already like the more there's levels to it, right? If you have an AI that can actually do that market analysis and send it to your algo, you can. And we also do size based on different conditions. And it improves our overall equity chart no matter what. But I do agree that it can be very difficult to like identify what that looks like. And it's sometimes being a discretionary trader, I think it's the being human and being able to just feel, because the market is just a combination of human emotions reacting to each other. Someone always says it's a complex system. And so the thing about complex systems is you're never supposed to really completely understand them. You're supposed to just react to them and understand what you see, and you can at least put logic to. So yeah, I think for computers it's harder. But I think down the road though, give it 10-15 years, I truly do believe people are going to be doing a somewhat copy trading algo version of what we're doing, because honestly, I think me and Alex talked about this, like, when I used to play Call of Duty, and at least you knew you were playing with humans. Like at least you knew you were playing against people who were in the same mindset. And I think that's the same thing with small cap. That's why people gravitate to the small cap world. It's like you're playing with, more than likely you're not playing with huge, billion-dollar algos who are, because they don't care, or you don't have the liquidity for them to play with, right?
Yeah.
But if you play with, if the thing about the market is that you can have someone with an aimbot and wall hacks. They can see everything. They can do anything. They can damn near watch, read order flow and react to it and do it better than you and be first to that order. And it's kind of shitty because the market it's not just made for a discretionary trader to thrive in anymore. I feel like computing it's like a fair hackathon. Go ahead and do whatever you want, as however you make money, you can make money. And I think it's like down the road in the next 10 to 15 years, I think it was just people would just see like, I think that's where like I should put more of my time into. And I hope that happens with especially like bigger traders, like traders who have like millions in the bank. Like I would invest more into like creating a way to automate everything versus like doing it on discretionary end. But yeah.
Definitely makes
I'm
sense.
trying to, I go back and forth with that too, because like I've found a decent amount of success with trading small caps, but it's very involved, as you guys know. And like, I guess I could say I'm semi-retired with the amount of time I put into the income that I make through trading small caps, but still I'd like to have something a little bit less hands-on. So I definitely think about algo trading or like even copy trading with TD, or because even through TD, you can link accounts and have the same trade execute on 2 different accounts as far as I know. So I think about doing that. Like you can do that with just the trades you're doing on small caps, and it's a way that you could essentially size up. But like for a lot of these stocks, when I send a market order for 3, 4, 5,000 shares, they get slippage and they get filled in chunks. If I were sending a 2,000 share order across 2 or 3 or 4 accounts, they'd get filled quickly and I'd be able to execute well. So that's one thing that I think about, like copy trading. But then I'm also thinking about like longer term, I'm really interested to start researching algo trading, and you could even apply that to copy trading as well. No reason that you need to algo trade just in one account.
Yeah, I don't even think there's a, that's I think where I was going with it is that I'm starting to realize there's no need for you to actually be the researcher, the developer, the everything. There are people who are giving out like copy trading. Like there was a guy, I actually talked to him in his like chat all the time. He's like the anti-guru guy. He does the trading stuff on YouTube, like sometimes. Daniel something. If you look him up, you'll find him. But he did a video where he bought like a ninja trader thing where he bought it from a girl, and he made like $1,000, but he paid so much in fees and everything. She was charging. I was like, she was charging out the wazoo. I was like, dang, she was. You would have to have like,
who's making money?
Yeah, you would have to have a lot of money to really do what he's doing. But imagine if you did that, like if you like kind of what Darwin X does, the platform I told you guys about before. Like where you can just pay for them to do that, and it's less of the hassle. Because I truly do believe now that trading is it's. I was talking to someone about this with like because she was talking about wanting to be a nurse for forever. Like she loves being a nurse, she loves doing this, and I was like, what if someone just gave you like 400K right now, and you can grow that up into the next, in the next 10 to 5 years to like multi 7, 8 figures. And you can use that money to give back to those people that you would be a nurse to on a daily basis. Would you rather do that, or would you, just stay being a nurse? She's like, no, but I really love being a nurse because of that. And I'm like, well, think about it, right? If you made that much money, you could just get all these people nurses, and you can, screen them yourself and get them to have their own. Like you could give more value by getting more growth in a more systematic way, instead of like fulfilling a sense of like pride in. But the reason I brought it back is like trading, because I thought about that with like, I used to feel that when I used to trade. I used to feel like the pride of trade, because I was a gamer. It's like you come in, you do your job, you do well, you're proud of yourself, right? Yeah, but then you think about the value you could have gotten from just doing that without having to do all that bullshit and like being as aggressive. Like, it only takes but a few numbers for me to increase my risk. I just have to change my and it's the same performance, right? I still would get like, Danny, you said you're like down 17%. If I put my risk right now to how much you risk, like that 17%, we would be up 80% on our algos. And that could be that could be even more if you just don't care about your money. Like I've heard of like algos for like 50% risk, like max drawdown, and they get like 200% every year. But it's a lot of risk.
That's something that I've seen with a couple of the guys in Warrior Trading. Manoli, who I've talked about, he took an account. We started trading at the same time in 2020 in the winter. He took a $25,000-$30,000 account. I don't know. He's made over 2.5, probably close to 3 million now at this point. he was kind of forced into big share size and just like a lot of risk tolerance. And I think about that all the time. Like I've grown my account really nicely this year, but I don't want to take out of it at this point. I do think about at the end of this year, I will withdraw from the account, probably substantially. I'll take my account back down to a small account. And then like, how's it going to make me feel? I know that every single penny in the account is pure profit that I can risk. So it definitely makes me think about my trading in that way.
Yeah, that's what I always think about too. Like that's why the whole thing I told like Tommy, I was talking about like when you overall double your size as risk, is like when you're just playing with pure profit and you really are still stable outside of trading, I think it's worth it to take that risk. I don't know what you guys' thoughts on that.
Depending
I
on
think
what's
yeah.
Go ahead, sorry.
No, I think it's hard to know, trust your profitability and trust your skill sets to do that. Because some people take the risk and they make that money in a week if they really get lucky. But
yeah,
if you're profitable, then
I think it just really depends on knowing and being honest about your best setups and your best trades and the state of the market right now. Like right now is probably not the best time to be hitting all the moves hard. We've had like one move a day that has called for hitting with big size or being aggressive on it, and that's cool. But I think it just depends on timing and especially knowing what a stock looks like when it's moving in a way that typically makes you a lot of money compared with the risk on it.
Well, when did you guys start feeling? Because I know when I started feeling like I was really set to like trade. When I was trading, I remember I was trading about $150. Like that's what I was expecting to make, and then I was losing anywhere from there, I guess, maybe a little bit more depending, because I think we allow our risk to go as far as we can as long as we're very consistent with our profit, at least daily. But like, when did you guys start feeling like, okay, things are starting to click a little bit more and you started putting on more size? Was it like a year in or did you like, or are you still in that, I guess, like sometimes when it comes to sizing?
I've gone through phases. I can talk about it briefly before you guys,
Definitely
if you want, but I've gone through phases. Like the first year, obviously I was learning and it was kind of quick for me. I found profitability in 6 months, which is not totally typical. And then basically at the 12-month period, and it was also because it was a really hot market. It was winter of 2021 and basically everything was going straight up. So yeah, I made twice as much my second year as the first year. And then the third year, which was last year, I made like practically nothing because I had a lot of bad habits from 2021, from things just going straight up. And you didn't really have to be too careful. Things weren't very punishing at all. Whereas last year, they completely were. And so now this year, I've corrected a lot of the mistakes from last year and I've started sizing up, and almost always whenever I'm able to, I cut my losses for like a 2 or 3 cent loss. Just if I get into a position and it doesn't do what I think it was going to really quickly, I'll just get right out and cut it for a tiny loss. So doing that with bigger share size when I get the right move, which is about 50% of the time, it's like a 10-to-1 risk reward risk, versus having to cut it, which usually I'll cut a trade 2-3 times or so before I hit that win, which is usually like 5 to 10x. So finally in my third year, I've started to really build actual confidence with what I'm doing.
I could probably add to that right away, where I think we had a similar experience, except I was trading some things before. So like in 2019, in like November, I started trading small caps. And within 6 months, so like in the beginning next year, summer, well, not even, it was like spring, I just switched from my cash account, funded made a fully funded margin account over 25K. And then it was like every month I made more than the month before. We were also into that bull market. It was like easier and easier to trade and you can get more and more aggressive. So I just had my chart is literally exponential. And then exactly what Danny said, like, a lot of the bad habits you learn started kind of hurting you. And I had like 6 months of almost straight consolidation where I didn't really make more money. And I'm breaking out of that pretty nicely, but I'm not on that second nice big front side like I think Danny is. I think Danny is slaying, especially 2023 right now. And I'm still waiting for that to happen, but I'm not really rushing it. I was trying a lot of different strategies, especially in Q1, Q2 this year, which was making me trip over myself. But
that's what I was gonna ask. I was gonna say, like, what do you think like gets you to that point of because right now we're this month we're in a consolidation month, and I know why. The market is down. We have a lot of long strategies, very few short strategies, and not short strategies that take advantage of what's going on. And I always try to figure out, like, on a discretional level, especially when you've been doing that well, like some traders right now who I see struggling. I'm just like, you've been doing so well for like 10 years. What happened? I try to figure out what is going through, and everyone else can still go on, because I'm trying to figure out, kind of get a sense of like when people felt profitability and when they didn't. But like, Alex, what do you think happened there? Besides, I guess you're saying that you were just trying a bunch of strategies and that kind of screwed you over.
Yeah, I was trying to hold a lot of moves longer, and with small caps, I just found it really difficult to do in the end. I ended up tripping over myself. And this is kind of funny because when I first started trading small caps, I used to always say, like, I'd be up 5% and then I'd close it for a 2-3% loss. And there was nothing more frustrating than that. And that's when I really started focusing on base hits. And I would just, just 3 small base hits of like 2-3% trades. That's almost a 10% day right there based on your average size. And that's pretty good. So, if you're trading with $5,000 average size, 10% day, that's a $500 day. So then all you have to do is really scale and take some more base hits, because I feel like those are pretty predictable. But then obviously sometimes you're like, oh, I want that 200% winner. But I've noticed that is very, very tough, because you just don't know which ticker it is. And you're going to end up taking like a dozen plus paper cuts before you have that big winner. Yeah. And you'll never, and that big winner will probably not pay for all those paper cuts, because you'll probably end up cutting the big winner too big, because you just never know if it's going to be 100% winner or 1,000% winner. And if it is 1,000% winner, I guarantee you won't sell it at 1,000%. So I've kind of gone back to my classic OG strategy, and then boom, everything, like the first month I focused on just doing what I know works, everything picked up again. And then I was like ready to size, and then we hit the summer lull. So it was like, I had like 2 months of like decent profit this year, and then it got nasty again. But yeah, it took me about 6 months to become profitable, and then it was an exponential rise. And then 2021 was a little bit choppy for me. And then 2023 has been so far my worst year, actually, because I've been trying all these different things. Yeah.
Okay. Yeah. Well, I know Colby is like more in the figuring it out stage. So actually, probably, like, what's your mindset going in on it, especially with risk? Because I feel like, I said this last time, I think so, but like I noticed just, the reason why those people who take those 50% drawdowns do so well is because they treat it like low-key, like a casino, and they believe. And the good thing is that extremes can get you far, especially if you learn how to fix the issue midway, because you have a lot of cushion to play with. Like kind of like what Mad is doing right now. Like he has 10 million to play with till he figures out what's the issue.
Is that how much he made?
5 million. Half of that is probably in taxes, but and whatever else. But yeah, he could
couple in his house,
and he could have made mistakes all 10 years and then figured it out now and whatever. But like, I know beginning it's kind of hard, because I remember that. I think that's kind of why I decided to stop doing that, because I was just like, and I feel like I kind of feel bad about that, because I feel like I know what the hustle looks like, but I don't know what that would have looked like this year for me, because I stopped trading, in February. I just haven't taken I'll take a trade for the computer if something glitches happen, but right. But I don't even think about the trades. But yeah. Kobe,
for me, honestly, I feel like when I traded small caps, it took me like a little over a year and like 3 months to get my first like 3 consecutive green months in a row. And then right when that happened, that was like the end of the bull run where everything just went up every day. And then for 3 months straight, I think it was from September to like January or February of 2022. The small caps, there was like nothing above 40% ever. So I was just bored as shit. And I was like, what do? I have a PDT account. I can take huge size on these large caps. So why don't I try to trade them? Then I try to trade NVIDIA. And then I come up with all of these strategies on NVIDIA. It works for a month. I size up, lose it all. Then another month goes by. I change my strategy. I add 2 more variables. It works for 2 months. Size up, lose it all. And then I'll be like, oh, I have too many variables. Let me break it back down to the simple ones. Do that. Doesn't work at all for a couple of months. Then I trade the SPY and it works for a little bit and it feels better than NVIDIA because the volatility is just so like similar every single day, which is the trap of futures and trading the SPY because you're like, oh, it moves every day. But then you realize, yeah, every fucking person in the entire world is thinking the same shit as you. And you're trading against fucking Warren Buffett. Every rich fucker in the entire planet is trading the SPY. So, and then I did that I'm still doing that for, I think it's been a little over a year. Yeah, like a year. And actually it's been like a year and a half almost of me trading the SPY. And that went from, I started trading, I tried to only trade continuation at first because, trust the trend is your friend, all that shit, that cliche stuff. And then I just suck at that. I had a 30% win rate, even though the trend is my friend. Well, how the fuck you got a 30% win rate if the trend is your fucking friend?
Actually, that kind of makes sense pockets, but I'll explain later. But.
And then I'm like, well, I love reversals, so I should just really hone in on that. So I go from having like 3 variables for reversals, doing the same thing I did with NVIDIA back in the day, works for a little bit, size up, lose it all. Do it again. And now I'm back to the point. Like 2 months ago, I probably had like 8 variables where at every point in the day, I would constantly be updating them in like an Excel spreadsheet saying, okay, it's 10:30. The R-vol is 0.4. That's good for volatility. If we have high volatility and we're trending down the day, what's the next level of liquidity that we should hit? Whatever. Do that, have like 8 variables. And now I'm back down to like 2 that are extremely important. If these 2 don't exist, I don't take the trade at all. And then a third one where if that's there, then I can size up more. And that's what I'm doing right now. And I've literally taken like 6 trades in the last like 3 weeks because my variables are so tight. So
nice.
I think
I was gonna say like that, to be honest, sorry to cut you off, but that's actually what you need to do in these markets. Unless you have the infrastructure to do really good high frequency trading, like most of these people I know who do algos, they trade on very wide time frames. Like I'm one of the few people I know, and some of these people say it's impossible, but I have some of my algos that trade on 5-minute time frame. Like they look on the time frame minutes, and that's the like smallest. And it's because I think I also traded those time frames, and I know how to. And it's very frustrating because there's a lot of noise there, but I found what, and I wanted the frequency. I wanted more frequency over a certain time period to get more trades, and I figured out what works more. But the biggest thing is to find the extremes. Like you need to find where, at least if you want to be, profitable on a non-high frequency trading sense, it's better to find the extremes. You can do, very high frequency type trades, but I'm actually dealing with that right now because I'm working on a HFT type idea. I keep the code there and I keep adding to it, and it fails, and I keep adding to it just to see what's happening. But it's good. It lets me know how markets react. And that's another thing. I think we're even just doing this on the algo sense. I get to see a lot more. Like I was telling Alex this, like the market closes for you guys at whatever time. I replay it whenever I feel like it. I get to trade. I get to do all your trades again if I want to tomorrow or today. So I get to see my trades look like, how they react to certain things. And I just notice from like a lot of my strategies that they find the extremes. Finding the extremes is way better than trying to trade it every other day, because those people who also that you say trade the SPY every day, you have to understand sometimes they're just closing positions. Like sometimes they've held positions over like 2 days, and they just need to close positions, but because their slippage is like maybe $1, they need to it takes them 5 minutes to close their position completely, and they do it in block orders. So it's very hard to know. Like I say, it's complex systems and you just try to understand as much as you can. But the intricacies of it is so difficult that you have to try your best to just understand the extremes of what you can find and what is like, because when you know something has dropped down 60%, you know, like let's say a stock, you know, dropped 60%. If it bounces to the high, short it. It is not coming back up. Like, you know, and that's I'm saying large caps, like a large cap, right? Like most of these large caps, when they drop like that, people buy it, but after a little while, they start to come back down again. And Dux is funny because Dux has an opposite strategy of like buying the dips on these large caps when they drop down 40, 60%. But yeah, but that's over a few days because they tend to bounce back up because they're large, they're not going to go to zero. But there's if you're talking about intraday, because we have an intraday strategy that trades midday and it looks for really extreme. That's the one that I showed you guys, the one that with the equity chart that was doing really well. Is that it looks for extreme highs on really, really weak stocks. So if you do that on something like Baba that's really weak, you can short it. But be careful because Baba also does this like whole thing where it spikes. But like that's not me giving advice on how to trade, but I'm saying the extremes can be really useful because anything can work, right? It's really how you structure your anything. But I've just found that trying to find the extremes of anything and trying to see if that works better, it's like it's a smarter way to go about it. But I don't know, you know, you guys trade low float, high frequency.
Reminds me of a little bit of Colby's when he always says Lance Brightstime's
Broken slot machine.
Broken slot machine. I mean, that's kind of what Lawrence is talking about, right? You look for the move that is it gives you that high expected value because it only comes once in a while, and that's what makes the SPY trading that every day so hard. And in a sense, like when you trade these small caps, we're basically just trading the one stock that is broken that day. You know?
Yes, exactly. Yeah, and that's what I'm saying. It's like some of those times where a short seller is just covering a position that he has to over a long period. You know, that could. That's why.
Sorry, I was just gonna say that's why I think that if you do trade the SPY or something like that, like it might take you literally 10 times as long to get good than small caps because small caps, you're literally trading against high school kids or some whale. And you literally don't need to have some crazy strategy that's like, you know, 15 variables exist. Like you can just bull flag breakout and there's a fuck ton of volume, period. That's the setup, you know what I mean? Or whatever. Whereas with the SPY, there's fucking 50 breakouts a day, but they're 1 penny. You know, they break out by 1 tick and then they flush 10 points. And then, you know, it's not like that. Your competition is so much smarter than you.
Sounds like a real nice.
It's so crazy when you look at both markets and you go back. Like it's so crazy to see the participants. Like they're so different. They don't even like they don't speak the same language because they like if they go to what the other, they'll be like, "What are you guys doing over here?" But money can be made in every sense. I think you said it best. Like you know, you said options is a good way to change any large cap into a penny stock. Yeah. Like there are different ways to do the same thing if you create it. But yeah, actually, you know, we I guess we miss Toby and Tommy because I'm still curious on like when you guys figured out profitability and like when it's staled or if it has staled. I don't know.
I found profitability probably a little after 1 year that I started. I started in the beginning of 2020, so pretty much the start of the whole bull run. But I was too inexperienced to really capitalize on it. So I was just kind of copy trading Ross Cameron. And literally as soon as he hit buy, I would hit buy. As soon as he hit sell, I would hit sell. And I would still be like 20 seconds behind him. And he would have a green trade and I would have a fat red trade. Eventually I blew up my account.
Because you're buying the shares that he's selling.
Yeah. So I fell into that trap. Blew up my small cash account for about $2,500. Then from there, I started another cash account and just trading one share, just getting my repetitions in. And eventually I started to, make just a few cents a day and just been sizing up from there. And I would say that came about between 12 and 14 months of doing that consistently every single day, not missing one day. So I wasn't really trading to make money the first year or just trading just to get, find my consistency. Then from there, just kind of slowly increasing my share size. I'd say about around like a year and a half, I started having like $300 days, and I was like through the moon. I was like, how the hell am I making $300 in 15 minutes? It's like the most money I've ever made in that amount of time. And I went ahead and just walked into my job and quit. I walked into my job and quit.
I remember
awesome.
that day. I remember that YouTube video. So
Dude,
I was like,
I remember it as
like,
well. Yeah, the video.
Yeah.
you made was
I
great.
remember the exact trade too. It was GFI. It was like a pre-market gap and go setup. Broke through pre-market highs. I made $350 in like 5-10 minutes. Went into my job, quit, came back, and
That's
I was
awesome.
actually
I
doing
love it.
really good. I was doing so good for about 6 months. I was making a nice like 1K a week. And then about 6 months in, about maybe November or so, the market got really, really cold. The
Yeah.
first cold stretch we've been in since I started, so I didn't really know what I was getting into. I was like, every single day there should be a stock that goes 300%, right? And eventually that stopped happening. I started to kind of panic a little bit. I was like, oh my God, I can't make money anymore. I can't make money
This
anymore.
is
I don't know what I'm
awesome.
doing.
This is normal.
And then I just stopped making money, started losing money, and eventually I had to go back to find some work. So after about 6 months, I was folding women's clothes at the Macy's women's department for $15 an hour. Not doing that anymore, but there's definitely a big kind of wake up call on what I'm getting myself into, and that success is not as linear as I thought it would be. I thought maybe after the $300 day, I would be scaling it to 5 to 1,000 to 3,000, but it just did not happen in that sort of linear way. So it kind of had a setback there. Still working kind of like an hourly job, not at Macy's. Definitely a better situation I'm in right now. Making a decent wage, work from home, outside of my trading hours. So that's kind of my situation now. Still profitable every single month, knock on wood. So I still have my edge that's still working, but I'm kind of just waiting for the market to kind of give some better opportunity for me to kind of push my share size again. As of right now, it's kind of hot and cold. So kind of just been treading water, I guess you could say, but still profitable at the end of the month.
Kind of interesting.
That's a good place to be. I would even
Yeah.
say, like, you have a work from home job that you don't mind too much and it pays decently. Like, even if you
Yeah.
start crushing in the market, there's no reason to stop doing that because it's
I'm
just
doing that right
more
now.
money.
I'm doing it right now. Dude, stay. And look, and I've had opportunities, like more opportunities to do other things that can pay more, and they're trying to get me to do hybrid. And honestly,
Yeah, no way.
right now what I'm doing is I'm investing in myself, in my long-term future, especially when I just stack up bread and just like, honestly, I don't, the thing about me is I really don't need to. I could just have people who give me money or let me, or want to just create an account that I could use to trade on. But I'm more focused. I think more right now I'm focused on really making sure I'm doing everything right, making sure I'm building the tools right, because one thing my boss used to say is that, my old boss used to say, is you want to be as undeniable as possible. Like, you don't want to be just another person that, like, if, for example, let's say if I was just a discretional trader and I didn't have like a good track record, like maybe I only had like 6 months or a year, like I couldn't walk up to someone and say, give me your money, right? But if, like, I feel like as being an algo is like it's the most statistical way that I can at least prove something to someone on a consistent basis and tell them how the process works and give them trust. So I think my goal is, like, in the next year and a half or a year from now, to be like super undeniable and just be like, okay, now I can really take, if I want to work for I don't know if I want to work for a bank, maybe like a hedge fund or something. Yeah. If I want to do that myself, yeah. If I want to just keep doing what I'm doing, then yeah, I could do. It's like, just make sure you're good enough to not have to look, worry about what's going to happen next. And I think that it's scary a little bit being discretionary, because you guys are all in like different journeys. Like, first off, this is an amazing cast. I just want to say, like, actually, you guys are all like in different stages of journeys, and you guys almost trade the same thing. So it's like, it's because Danny's like sizing up from what I'm saying in this shitty market. Like it sounds like you're sizing up in this ish, situation, whereas everyone is like kind of like taking it as it goes. And it's like, it's good to see like the mindset of like, well, if you really wanted to, you could be a Danny if you trusted yourself. But it's like, do you have the skill sets to be a Danny? And then it's like, and that's why it's like, it's interesting to see it from a personal level, because also I do think your income, how much money you saved and all of that is big too, because I know for a fact that I couldn't take some of the risks that I feel comfortable taking right now if I didn't have like some money saved up. Like,
yeah, I totally agree. And it takes a while to get to that place.
Yeah, it takes a while to get to that. But if you do it, it's like, it's honestly, it feels like you're just like, when we take trades, I'm just like, oh, this is just like another, I feel like I put my money in SPY. I don't feel like I'm thinking about it. It's like an investment into my trading. Versus if you your money to live off of, it's kind of a whole thing. Oh, I feel like Toby just dropped out.
That's where the mistakes come from.
Well,
once you're thinking about rent and trading.
Yeah, that's why I have two other main sources of income. Happily and luckily, trading has become by far the main source of income this year, at least, and I expect it to continue that way. But you can't count on it. I can only try to do better than I did the day before. Try to correct the mistakes I was making last month, last week, last year. All of that. I am continually trying to size up, but really trying to be careful about how I'm doing it. Like I said earlier, just trying to recognize what are the stocks that move, that the way that they move, I typically make the most money on them. Size up on those, be aggressive. Anything else is honestly not worth trading. That's my approach to the choppy market. And the first 2 weeks of August were really difficult because we came from a full 7 months of the year that really rewarded me for trading exactly like I did. And then it was basically a full dead stop. And so I had a bit of a drawdown. I was, before today, down like 5,000 on the month, which is a really pretty fairly small pullback considering how the first 7 months of the year went. But at the same time, one of the things that I really like that Lance Brightstein says and talks about is, like, you have to have some sense of urgency. The market is always going to be here for you, but you have to have the sense of urgency to correct the mistakes that you're making and to size better into the best trades that you're taking and to develop that edge constantly. And like, even if you've been profitable for 5 or 10 years or so, the market goes through cycles. AI is happening right now. There's all kinds of algos and stuff that we've never seen before that we have to adapt to.
Yeah, I agree with that. And the biggest thing I worried about, even I think that's why I decided to just run to the algo door, was because I was like, well, I don't want to be in a position. I actually, that's why I said me and my girl used to use Matt as like our case study of like, this is what it could look like where you could be profitable for 9 years and have 2 losing years consistent back to back, right? Years, not months, right? So it makes you think like, how can you try your best to mitigate yourself to your equity, like how you can, destroy your equity or potentially, hamper it for a little while. And I think it was just my way. That was my way of saying, yes, this is how I'm going to do it. I don't think it's the right way. I think, like I said, a lot of discretionary traders perform really well. But I am curious though, like when you guys trade, because I remember this when I used to trade and the market was so dead, especially the small cap market. I think it was the time that Tommy was talking about, like, it was right after 2020. It was like, I remember even Relentless 2021. I think right after that, even Relentless was posting it. It was the beginning of the year or whatever. And it was like from January to March, just nothing.
Yeah.
It was barely
last year. I remember that.
Yeah, last year. And I was like, I said, I can do this. And so I started looking at like small, large caps and like, what at that time I didn't have a PDT account, but I was like, what do these things do? Like how do they react? Like what goes through you guys' head especially when you have like a dead market like that? Do you like start thinking, okay, I need to take some of this money to SPY or to like what's the
I think my old self would have been really nervous, like before I was profitable. I don't know. I think I would have been freaking out right now because it's like your dreams are being shattered and you don't want to wait any longer. But once you're profitable, and I'm not like crazy profitable, like I haven't hit my million yet. I haven't hit my 500,000 yet, although I hope I will at one point pretty soon. But like, a lot of funds break up, like long-term capital management, that was an algo fund and it blew up too because they're basically mean reversion and they couldn't handle the stock collapse in the dot-com bubble. There's a really good book on it. I think it's called More Money Than God, and it goes through several large funds. But like for me, when I have this situation where the market is not good right now, expected value is red, I now look at it as an amazing time to work on other things. Like this week, I've been getting so much done because I haven't been looking at this trading screen for 4 hours. I mean, it's only been now 2 days. I feel like I've been like, doing all those things I've been wanting to do, working on my strategy book a little bit, where I'm just kind of writing down everything and organizing it, working on TradeJournal a lot more, watching a lot of YouTube videos that I've been having on my playlist, just kind of like, you know what, I'm going to put all this time into like doing everything else I've been wanting to do.
It sounds like you guys are just creating, or you're at least creating a new source of income outside of the market. Like you're trying to think, how can I put my effort into something that could give me value outside of
trading? But it's also a lot of self-discovery and self-exploration. I've been also spending a lot more time at the park, working out a little bit longer. So it's more of just like waiting for the market to be good, because I know most of the time I make most of my money in like a fairly small period of time. It's the classic 80-20 principle, right? Where most of your income is going to come from a very small period of trading, and it's probably not going to be in July and August. Most likely not. Based on my stats, definitely not. So I don't mind taking off right now a little more.
It's funny you say that because our biggest profit was in June and July. July was the biggest. It was like
June and July were good.
I mean, if you have, I mean, everyone's strategy is going to be different. For me, I need momentum. I need small caps to be ripping. So if you're more of like a large cap, maybe where it's a simple trend, especially July was just a beautiful front side trend in the market. So I could see some funds or some algos doing really well right now. But for me personally, this is like horrendous conditions. It's like going to the beach and trying to surf and it's flat, like best case
every day
get bit by a shark. There's like, there's no upside. There's only downside.
That's how I felt. I felt like it was just so much, like it was so dead. I was like, what is going on? And if you're not profitable, I guess being more of a hamper. I think for me, it's funny because you say that, because I kind of do the same thing. Like right now we're in a lull in our account. I think we're up on the month, but like I think we're up like $800. But like
it's not like up what you would.
It's not like up like $2,000, which would be nice to just finish because anytime I get up to 2K or a K, 1K to 2K, it's just like, okay, good. We're at least keeping base levels, and it's just based off how much I size, right? And so. But now that we're down, I'm just like, all right, well, I'm just working on new strategies that take advantage of these new conditions, or these conditions missing out. Like on this new, breakdowns, all these large caps are breaking down. So I'm creating new strategies that really take advantage of breakdowns. And then that is me kind of, I guess that's my next source of income, because each strategy is uncorrelated. So each source of income.
Yeah, there's two things you can kind of do, right? Work on new strategies, which I was kind of doing in Q1 and I had a really bad time for some reason. Or option 2 is like, trading is like riding a bike, but you don't need to ride your bike every day. But when you do, you have the strategy and you have the skill set. So I feel like for me, it's a little bit like riding a bike. Once I see the market picking up, I won't have all these bad habits of over trading in the summertime. Because that's happened to me before, where the market started picking up and I started not trusting any moves because I just did it was like 6 months. It was like this really bad lull in 2022. And I didn't trust any move that popped because I just learned the worst habits. So to me, it's like I want to step back a little bit, not too much because I don't want to be rusty, but really being conscious of the market.
So like I know Colby was doing the Airbnb. Does that's feel
another great thing?
Yeah, that's like another great way to do it, because I'm considering doing stuff like that, even with trading. Like like I know some people who want to. I had a friend who wanted to do something with me trading wise. And it's like, for me, it's like, though it's outside of what I do, like how I make my money on the trades individually, it's still like an outside source of income, because that would not be that I would get paid for that on a regular basis, right? But like, yeah, something like with what Kobe's doing with the Airbnb, which is like, I'm curious to know how that's still going, and how it feels to like have that, how it feels to have that under your belt while you kind of learn up and figure out what your day-to-day is trading, especially with how infrequent you've been trading.
Honestly, I mean, I feel like this is the first time ever where I took principles from the stock market and I applied it to like overall business and economy. And I was like, holy shit, I have an edge in building stuff because I just built tree houses and stuff. Like my family, we grew up on 70 acres of land. So like when I'm 6 years old, I'm literally in the forest, like alone by myself for like 6 hours, like making shit, just doing random stuff. That's literally all I did my whole life. And then, I was like, why don't I just, because I built this whole apartment, like all this room is completely just a blank white room before I was here too. And I was like, I learned how to do like frame walls and just do shit that I never did before, because I just built like platforms and trees. And I was like, you know what? Why don't I just, I see all these little campsites all around the place. Pennsylvania is beautiful. People come here for like hiking and shit like that. And camping, if you look at the trend of camping, it's just going straight up. Like it is a huge trend straight up. And I was like, why don't I try to take some of that edge of like knowing how to build shit and make a campsite that's cooler than other people's shit, offer them better stuff. Like we have a pond on our property that was like filled up in 1977 from a flood. It used to be like a speedway in like the 70s, and it got filled up. So we have this awesome like 2 to 3 acre pond. So I was like, we have all this shit sitting right here. All I need is the approval of my parents to let me build shit on the land. And they were like, sure, we don't care. So and the whole premise of it too is that I want in like 35 years, whenever I guess that not that long, but maybe like 20 years from now, when I have kids and like all that shit, I want them to be able to do the stuff I did when I was a little kid. And if I come back here in 20 years and like my parents die or they are not living here anymore, like this land is going to be so overgrown that I won't even be able to enjoy it. It'll take me 2 months just to get it back to baseline. So the whole premise, like me pitching it to my parents, is like, hey, let me do this. My equity in this will slowly dilute over time. And then the money that is made from those cabins, because this isn't going to be my first cabin, I'm going to do many more of these in many different places, not just on my property. Then over time, that money from the cabins can pay for keeping landscaping good and taking care of the house and doing all that shit. So it's really cool because even like the risk aspect, like I spent 10 grand on it to build everything. And it was all built by me. So I saved like at least half. I would have spent 20 if I had to pay somebody to build that shit. But I would have never spent 10 grand if I didn't think for a second, like, dude, I spend like $20,000 every time I take a 1 contract position size on the futures. Like I put on risk. So I put on way more risk than 10 grand every time I take a trade. So why am I scared to do something where I'm actually decent at it, like building shit, and see if that works? And it's made like 50% so far in the first like 4 months. Yeah.
Beautiful.
Yeah,
like
putting
4
money
months,
on hard assets. Putting money on hard assets is still hard for me because I like seeing the dollar amount. I know I'm liquid. I don't can put it out. Because one of my friends is trying to get me to do real estate stuff with him, and I'm like, no, not yet. Let me deal with this annoying investing, this annoying vehicle that I'm using to increase my wealth first before I get into another one. And I also think
sometimes to focus on one thing first. Now that
and I also think it's like for me, I have the luxury of having semi multiple streams of income depending on which strategy is performing that. Like one of our strategies, oh my god, does this thing even work? It hasn't even ran for like a month or two. I don't even know. It hasn't taken a trade for 2 months. But when it takes trades, it does so well. So it's like so it's one of those situations where, and I don't have to take the trade, it does everything. So I feel like that for me feels like a new source of income that is thriving at that period of time. So
that makes sense.
I think it's this is what someone said in a podcast, is like algo trading is one of the harder ways like of initially trading. Like it's easy for us to like just sit in front of a computer, get a broker, you'll be able to just trade, right? If you want to get an algo to do it, you have to understand the statistics, the coding, the blah blah. You have to get into that whole field, right? But when you get into it, the work is done. But versus when if you still have to do it on a day-to-day basis, it still feels a little bit like a job, even if you're working for just an hour. And I think that's my mindset for it right now. Is like I feel like, I probably spend more time on this desk than most of you guys, because I literally sit here for like 12 to 15 hours a day, like literally here. I'm not even joking. I go to the gym, but I'm working, and I kind of have it in my head, like I'm investing my time for the next 2 years to have all the learned knowledge for this. And unlike most people who get into this and are unprofitable, which I don't get me wrong, I've seen some unprofitable algo traders. I've heard of those. I find it interesting when those people are unprofitable, because I try to figure out, and then I learned that they did a lot of things wrong, and so it kind of makes sense. But for me, I feel like I'm just trying to invest as much time to make sure I'm always profitable and doing things the right way, and always making sure that I don't have too much risk, or I'm not putting myself in a situation where I have to dig myself out of a hole, and if something was to ever go wrong, which I'm sure you guys all do the same every other day.
That's the main focus,
Try
right?
to.
You don't want to be in that hole, right?
Best as we can.
Yeah. Toby, do you want to share your how would you call it, your success or your journey into profitability, I guess you can call it?
Yeah.
Or is Toby already MIA?
I didn't. Yeah, I said it just now. I didn't know if he was still there. That's why
Asleep.
I'm just sitting in the background. I'm about to fall asleep.
Yeah, especially after trading till market close yesterday in your time zone. That must have been brutal.
The best choice I made today was I closed my computer when we, like 10 minutes after we started talking. So
Like almost always the best choice, it
I'm happy
seems.
about that.
Yeah, that is so
And I was
true.
green, so that was okay too.
nice.
But I didn't trade the best ticker. I should have chased it with Danny, but
Yeah, that's true.
Which
felt
one?
like, huh?
Which one was that? VFS?
Yeah, the one. Yeah, I just
I had
felt
some
like
nice trades on it.
Just felt like I was getting high, getting in high, going to get in too high every single time. So I said, forget it.
You want to see something funny? If I'm sharing my screen, you guys can hopefully see this. So I'm tracking my stats and all of that. Look at this. This is August for me so far. So down a little bit. What's that?
That's a lot of red days.
Yeah, well, okay. Well, yeah, and exactly. That's a good point, because
I'm also
look at how bad
Yeah,
August
that's what
has
I didn't.
been.
Because I saw your chart. That must be really rare for you then.
So yeah, it's been a really tough month. So this is also a factor, I think, of me taking bigger size. That's what I'm trying to tell myself, at least, is that here's a $4,300 day, 4,300 red, 33 green, 38 red, 23. So it's to both sides. It's just been really choppy in August. So I'm trying to limit my emotional connection to it, at least. Because at least I'm having big green days too. But look at this. August, the only day I'm allowed to make money in August is Tuesdays.
Oh my God.
That makes it an easy week for you.
Yeah.
Tuesdays are also my best days over 3 years, significantly.
I don't know what it is. Yeah, I'm just trying to be careful, trying to be mindful of how I'm sizing, what positions I'm taking, all of that. But that's something that I am considering, is that it's been a tough month. I'm red on the month within literally 2 really good green trades worth. So it's not the amount I'm red is not a big deal. I just need to tighten up what I'm doing, and it's just constant strategy refinement.
Yeah.
When I see Danny's shit, I'm just like, bro, if you could combine algorithms with discretionary, and you can have just a consistent, constant expected value, it's just sitting right there, right in front of your face, and it'll lock you out the second you get below whatever some expected value number.
So it's so hard. Huh?
I was saying you can probably find some sort of measured variables to create that for you.
No, that's what I said. I don't know why this sounds so it's not that big a deal. I mean, you could actually create, like I told you, so that freedom app that we have, right? You could literally trigger it to close. Well, you can tell it to close after a certain time. But let's say if I was to create a program, what I'll do is I'll just, because I know TD Ameritrade's API. I could probably just see Danny's account. I can look at how much money he's lost today. And if he's lost over a certain amount, I could just like mid trade, I could close that trade and then close your account and the freedom, and then you can't.
I wonder if that would do more damage than good, because Danny does
exactly. That's the problem.
That's what I've
So
that's what I was waiting to say.
I would need your statistics over like 2 years to know if it's actually worth doing. Like
that would be interesting.
Yeah, if you gave me your statistics,
exactly.
I could just redo some research analysis on it, like break it down into an equity chart. Like if you just give me any open close price, I could break it into an equity chart throughout the day, like in any time frame, and I can see how you reacted on different times. And I can be like, okay, Danny, I can prove for sure over 2 years you should have never traded on August 1st. And I can just tell you,
yeah,
I'm gonna close your thing on August 1st. For some reason.
Here, let's share again then. That's the hard part. Specifically about my trading is that the typical trends and expectations that you might think, like people ask me all the time, do I have a max loss? So that's a good day. And here's a great example of why I don't have a max loss. Let's see.
That was insane. I was like down
here,
triple bottom. And
here's another great example of why I don't have a max loss. Obviously, I'm not trading well those days, but if I had stopped down 3,000, I'd have had a $3,000 red day. That was a bad day. Like a lot of these days, especially in August, like there's a specific reason why I don't have a max loss. And I don't know. I imagine it would be very difficult to code something to trade so discretionary.
Because honestly, I wouldn't even care to do that. I would just copy your trade. I would just make like whenever you take a trade, I'll just get something to take a trade. But I would, which I always think about, like, do hedge funds like S&B Capital do that? Like, if they don't, why don't they? Because like,
there's a rumor that I've heard. There's a guy, Anton Creel. He used to be, I think, a Goldman Sachs guy, and now he goes around and he does these seminars. He has talked at least in a couple seminars that I've watched, about how your broker, when you place a trade, they have you in either the profitable or the unprofitable bucket, and they will either take the same trade or a trade against you based on what bucket you're in. I don't have a way to verify that or anything, but it makes a lot of sense to me.
Yeah,
it's called B-booking.
I don't know if they would do. I don't know what the ethical issues are with that. I don't even know.
They don't give a shit about ethical.
No, I'm sorry, not even ethical. I mean legal. I don't know if there's a legal thing around that. But if they did that, I don't think. I mean, I wouldn't really. I was thinking about this recently too, because like okay, we know for a fact that these like Citadel, they all get your order flow, right? They get your orders no matter what, and they have to do something with it, right? And because they have to be profitable, they're high because their job is a market maker. Which realistically, if you think about it, everyone is a market maker. Everyone is just fulfilling an order and whatever. They have a required amount to fulfill, but they can use their strategies to do so. Like they have strategies on table to react to your orders, right? So if you think about it, are these people technically, especially if they can buy order flow, are they just illegally creating a strategy? Because they're just reacting to your orders in ways that they're paying for it, right? So they're like
front running you.
And then
I don't think that would be illegal.
They can front run it. Well, it's not illegal. It's controversial.
Questionable.
No, it is controversial. It's a big thing that they've talked about. Like
controversial. That's the
but I've dealt with this for a while and had like questionable like thoughts about it. But then I think about well, I need my order filled. I'd rather have my order filled than me struggle to try to.
Exactly. It's like, what's the alternative?
That's the most important part.
Number one is like, what's the alternative? And go ahead.
No, I was just going to say the argument for you not having a max loss seems to me like that you're somebody who won't, if you start having red trades or going down, let's say after 1,000 in the red, you're somebody who's not going to take that and kind of spiral mentally out of control. I'm on the other hand as someone, look, I notice mentally, like when I start getting into that red mind space, I'm definitely feel like I'm more likely to go more red because it influences my strategy. My emotions start to take over, and I'm cutting winners way too fast because I want to have a green trade, or I'm letting my losers go way too deep on big size because the big size is like I'm more attached to like a bigger position because obviously you want it to end up to be a green trade instead of. So that's also active emotion rather than just seeing it as just a trade. You cut it at your stop. Instead of trying to hold and hope. I'm more likely to do that if I start spiraling out of control in the red. To me, it seems like you are somebody who can kind of recognize that and not fall into that trap. So definitely, hats off to you for not, being able to do that. I freaking for sure wish I was able to go from negative 3,000.
I want to add Toby does that too, because I've watched these podcasts enough to see his. I don't go on TradeJournal because I've gone through it before, but I only went through it because I needed to see Toby's and
Toby's got the craziest running P&Ls too.
His equity charts don't look like let me explain. So
Toby and Danny's
I've learned over a long period of time, stop losses are really bad. They actually overall make your strategy less profitable. Like I could show you a bunch of examples of if I brought my stop loss closer versus if I just put it to the moon. You could probably be just profitable if you just didn't even put a stop loss, but put a logical stop in place, like a logical stop thing to reason to stop. That's something that just makes no sense because if you're shorting something and it's up 200% and you've been down since it was up 90%, stop trading. Or maybe wait till it's up 300 and short, but never put a stop that's going to be like, oh, stop on the day or whatever. So maybe that's why that happens. But it still is that, my algo, there've been days where I think our algo was down like $700. And I was just like, what? What? And then, but it keeps taking trades and it takes trades. And I'm like, what's going to happen to the, and then it makes up, it's up 300 at the end of the day. I sleep, I wake up, it's up 300. I was going to bed before I took a nap in the afternoon, but it's because the algo it wasn't emotional and saying, oh, I'm up down 800, let me stop. It kept taking trades, and I was scared for a second. I was like, "This is gonna be $1,500 loss losing day." So I guess to show you, like, a Danny being like Danny might be the better option.
Yeah, I agree. I probably net Danny's like the way to go, not having a stop, or Toby as well. But for me, I'm definitely I agree with Tom. Like it's exhausting. You could get on tilt, you get on a red state of mind. And I think the better you get as a trader, maybe the less that happens. But even then, let's say you're down 1,000, then you're down 2,000, then you're down 3,000, then maybe 4 or 5. Then you finally get back to like only down 1,000 on the day. And then maybe you end up 100 on the day. And that happens like 3 days in a row. You just hurt. You're like, I would probably rather be down 3,000 than up 300 at that point, because I'm going to be mentally a mess at the end of those 3 days. And that's going to really mess me up sometimes going forward. And that's just myself. Now, that will probably not work for other people, but I know for me, it's better to risk that, to stop the mental downside, because I've had those days where I traded like 8 hours, the full day, and then I would do that back to back. And I was so shot at the end of the week where I was like, I think I just lost a year to my life. Like that was exhausting. So I would rather not have that. And that's my reasoning. Not the reasoning is my P&L won't be better, because I do think it would be better. I don't want to put myself through the stress.
Yeah. Well, here's the thing is like people in the Warrior chat, frequently they see me have those kinds of days. And my only response really is like, it doesn't matter which side you're on, whether you're the type of person who needs a max loss and that keeps you safe, or you're the type of person who can keep trading and make some back or make all of it back. It doesn't matter. Yes. The only thing that matters is which side you're on.
Yeah, you know what works for you. I totally agree with that.
Yeah.
By the way, I've tried that on our equity chart, our overall equity chart combined. I've tried stopping over after a certain period of time, it made less money. Because most of what happened is that the times where it would have made back the money,
Well, that
it
makes
didn't.
sense for
Yeah, yeah,
algo
that-
type trading
yeah,
where you're
I don't
not
think anyone's
emotionally
arguing
involved.
that. I don't think.
Yeah, no, I'm saying it goes back to the idea that yes, it would. Well, I'll put it like this. I know sometimes the better way to make the algos, but sometimes I make them so that it makes me feel comfortable. Like I know sometimes they're not putting like maybe for example, I'm dealing with an algorithm that one a strategy, the breakdown strategy that I'm working on right now. And because these markets have such a huge tendencies to go up and they go back up, like I'll get ready for a breakdown, but it will bounce back up and it will come back up. Obviously just equities market. But it loses a lot. But when it wins big. But for me, because of the type of trader I am, I'm not comfortable with seeing 8-9 days of a strategy just keeps losing. It's very hard for me to, but yeah, I know the strategy works on the bot, but I don't even know if I want to deploy that yet. Like, so I think there is something to say to like, sometimes we do things to make sense for us, and it doesn't really have to make sense like for our P&L. Because if it I don't know if it's sometimes I think it's bad though. I don't know. I wish we were all a little bit of robots and we were just like, no, this works for our P&L. We'll be like Danny and just like keep trading.
Bro, I stand by the
robot.
fact that if you literally just put yourself in a black room and it was just locked in there for 3 years, you would absolutely be a million times better than if you could see how everyone else trades and hear all these cliches. Trend is your friend. S&B Capital says this broken slot machine, change your sizing all the time. Well, what if you're not supposed to fucking do that? Because that's not who you are.
Yeah.
You know, it's like,
you gotta trade your personality. I'm
That's the biggest thing. Yeah, that's the biggest thing, especially with like, we have a few thousand members, and the thing that I try to get across the most is, I do weekly mentor sessions where I'm going live, I'm talking and all that. We have another guy who does that. We have Ross who does that. We have a couple other mentors with like $1 million badges. The biggest thing that I say is like, you'll see all of us calling out trade ideas. That doesn't mean it's the right trade for you to take. And you just have to figure out which one of us or combination or whatever kind of works best for you. And that takes a long time. That's the hard part.
Yeah. That's really
especially when there are a
well
lot of noises in your ear. Yeah.
Yeah.
When you're hearing everyone doing something different. I think, we were talking about
Yeah.
Like Colby, you said that you like I think you said you were doing it for like 3 or 4 years, and you've been like you've tried a bunch of different things. And I'm always like, it's very interesting, even from my perspective, now that I'm more algo versus when I used to, because I look at myself like, what was I doing before when I could have just kept doing this thing? But when you don't know what this thing is, you're kind of just like having to figure that out. And that process alone can like destroy you. Like, I think sometimes it's better to just stick with something and just not touch anything else. Or like if someone gives you a strategy that works and they can prove it, like kind of what we talked about with Darwin X and stuff like that, then okay, just trust that and just do that. But most people are not doing that. No one is really. I don't know if you guys know anyone who for sure has a back-tested strategy that they're just giving out. And they know their exact entry, their exact exit, their exact reasons and all of that. Most people don't do that. Like the amount of work that it takes to get that done. Like the reason why we have 7 strategies is not because I've made 7 strategies. I have way more. I have like a folder with like probably 30 different things in there. Some of them are just too correlated with what we have, and the ones we have are the best. So it depends on like what is the idea that you feel comfortable with going for that day or for that next 6 months. And I think when you find that, then you finally be like, all right, I'll stick with this, and then maybe I'll dabble into something else like on a sim. Which I don't know if you guys use sims when you started. I know I didn't. I just didn't.
Went
care.
straight live, started making real mistakes, learned from them.
Sims are great just to test out buttons stuff. Sometimes I do that just to make sure my hotkeys work. And although Sims often don't work with hotkeys, it's super annoying. But
TD does not.
Yeah, no, it's so annoying.
Swim.
But hey, guys, that's a whole different topic, and we actually have to probably cut it here because we've already way over.
Yeah.
Although there's so much.
I got to get to the gym.
So much to talk
Lawrence
about.
does too.
Yeah.
I go at 8. I don't. There's too many people in the gym.
I gotta get to dinner. My girlfriend's already knocking. Toby's got to get to bed.
That's a cool episode. Good stopping point. We got a lot to talk about.
Dude, so much, and maybe in the future we'll have more talking points we could all think over. But we had some great topics we covered. So
Yeah.
appreciate it, guys.
Yeah, good stuff.
And great first 6
Good
people.
stuff.
Take it easy, guys.
Guys.
All right.
Later, boys.
I'll see you guys later.